Hello, everyone. Welcome to the FTX podcast. Really glad to have here with me today Matthew Ballensweig, VP at Genesis Trading. Welcome.
Thanks so much, Kristen. I really appreciate you having me on. Great to be here.
It's great to have a chance to learn a little bit more about you guys. I've heard a lot and I've been curious. Would you mind starting with an introduction of yourself, a little bit of backstory?
Yeah, absolutely. My history kind of goes back. I started my career at Fidelity Investments in Boston. So I went to school up at BC, and then after graduation, spent about a year and a half over at Fidelity Capital Markets in Boston, where I basically got exposure to a variety of different trading desks. So this was back in 2013. I spent some time in fixed income electronic trading, fixed income sales, and then prime brokerage. And then from there, went over to Bridgewater Associates in Westport, Connecticut. So Bridgewater is obviously, the largest hedge fund in the world. There are about 1,500 people, global macro focus. And my role there was on the research and kind of client service side. So basically working with client advisors who face some of the largest buy-side institutions in the world. So think like your big sovereign wealth funds or big mutual funds or pensions. And, my role is mostly rooted in research and analytics, trying to basically help communicate and describe the investment philosophy, and then kind of more in the weeds around the investment analytics at Bridgewater about the variety of strategies that they had. So they have like an all-weather strategy, a pure alpha strategy, and then like bespoke client investments as well. So it was helping kind of communicate that picture to clients, and obviously doing some research as well. Spent about 3 years there, and in my last year, one of my colleagues actually at Bridgewater left to go work at Digital Currency Group, and specifically for their subsidiary Grayscale. So for those that don't know, Digital Currency Group, they're one of the largest VC investors in the space. They are the parent company of Grayscale, which is the sponsor of the Bitcoin Investment Trust. Genesis, which is the OTC trading firm and lending firm, and now prime broker, and then CoinDesk and Foundry. So, and then on top of that, they obviously have like a portfolio of digital currencies themselves, along with a huge venture portfolio. So, at Bridgewater, my colleague Matt Beck actually left to go start Grayscale. Was the second employee there. And he helped build out that business. And then for about a year while I was still at Bridgewater, we were, communicating about digital currencies in the space, and he was getting me pretty excited about it. So I started looking into it in about 2014, 2015. And that's when he ultimately convinced me to basically come over to the DCG family and help our CEO, Michael Morrow at Genesis, think through like what other business ventures Genesis might want to endeavor into. At the time, we were one of the largest OTC trading desks in the space. So it was us, Circle, Cumberland. This was back in like May of 2017 when I ultimately joined. Mm-hmm. And there's obviously a lot of opportunity in the space, and the space was super immature at this point in time. There were no futures, there were no derivatives, FTX wasn't around. And so, the question was like, what else should Genesis be looking at? How else should we leverage our scale and balance sheet and backing of DCG? And so like the natural extension at the time was kind of venturing into the lending space. And so that's where I joined to help, our CEO kind of spin out a separate entity called Genesis Capital, obviously still under Genesis, to really focus on just building, a lending business. And so we had our spot trading business. I helped grow the lending business. We formally launched in March of 2018. And today we're one of the largest, probably the largest institutional digital asset lender in the space. So that's kind of how I got into it, and that's where I am today.
Perfect. Thanks for that backstory there. And then a few questions for you. One of them is, you're in or were in one of the best jobs you can be in traditional finance, and I'd like to know a little bit more of the rationale of what got you excited enough to leap into this incipient industry. I mean, it must have taken some courage on your part.
Yeah, it definitely did. I remember like describing it to my friends and family, like about making the move, and they were like, that seems crazy. Like, what is Bitcoin? Why would you do this? Like, this is a huge risk when like you have a great opportunity obviously in front of you that, you're now 3 years into. But for me, it was like pretty obvious. Like when I was at Bridgewater, and for those that don't know, like Bridgewater is a well-oiled machine. It's like I said, like one of the largest funds in the world. They're super sophisticated in their investment strategy. They're very, very systematic in their approach. They have world-class engineers, world-class signals team in terms of understanding markets. And so like the ability to add value and be super close to the outcomes of your work, it was tough. And so, the opportunity and potential opportunity to go into a space that was super new, the infrastructure was like just being built, and it was super nascent and young was attractive to me, obviously. And then getting more and more familiar with like what Bitcoin was and what the potential of these markets could be was obviously exciting. And then I obviously went and did due diligence on, Digital Currency Group and Genesis and figured out what their position in the market was. And it all kind of lined up. So, that got me, to the point where I wanted to go meet the team, talk with Michael Morrow, our CEO, about his thoughts on what's next for Genesis and the opportunity out there. And, ultimately decided to make the move because I wanted to go build something and actually shape this market. And so I've got to do just that. And it's been a wild ride since I started, over 3 years ago now.
Were you already a Bitcoin guy or a crypto guy when you were looking at all this, or did that ever happen? Like, are you a crypto person, or is it just the thrill of building something great and huge?
No, definitely a crypto guy at this point. And I started looking at crypto, like about a year before I actually joined. So I was following the markets, like trying to understand, how to make sense of the valuations of the assets, looking at the market structure, seeing what exchanges were out there. And then like that obviously informed my, understanding that like there's a lot of work to be done in these markets. Like they're super young. And so like the ability to actually go and be able to shape them is what got me excited, but was certainly into Bitcoin at the time. And obviously like trying to trade the assets myself and get exposure before joining. So I would say I'm a crypto guy, but also a markets guy just generally.
Mm-hmm. And quick apart here, is Digital Currency Group or one of the biggest entities in crypto? I assume maybe Binance and Coinbase may be a bit bigger, but I'm not sure there.
Yeah, Digital Currency Group is pretty massive. So for those that don't know, Barry Silbert is the founder and CEO of Digital Currency Group. He started the company in about, I think it was 2014. Before that, it was actually a company called Second Market, which was a broker dealer that traded like illiquid securities. So think like Facebook private stock or like auction rate securities. And then ultimately Barry made the decision to kind of focus solely in the cryptocurrency space. And so I think it was 2014 or 2015 where he made the decision to say, we're only going to trade Bitcoin. We're done trading these other assets. And so he started Digital Currency Group, which became, a lot of different things. So they're really a nexus point in the space. They have a portfolio of about 150 portfolio companies. So they were one of the earliest investors in Coinbase, in Ripple, in Zappo, BitGo. They basically have exposure to all of the leading companies in the space and are today still one of the largest investors in the market. And then on top of that, they wholly own like 4 major subsidiary companies. So Genesis, Grayscale, CoinDesk, and now Foundry, which is focusing on mining in North America. So they're massive, both in terms of like the amount of capital, their balance sheet, their reach, and their reputation in the space.
Oh, that's awesome. What an exciting place to work at, honestly. That's really cool. I mean, that's a similar feeling we have at FTX as well, except FTX is still a little bit of a younger company. So it's probably has that feeling that you got when you just started at Genesis.
Yeah, exactly.
And going to when you started at Genesis, I'd love to hear a little bit about how you brought this market knowledge that you had from this fundamental firm and use that to help build out this lending desk.
Yeah, for sure. It's a good question. So basically, just to kind of give some history, like Genesis started on the OTC trading side. So what that means is basically, we were connected to a lot of the leading, any hedge fund that was looking at the space, any like, innovative asset manager that was considering trading Bitcoin. Genesis built a network of buy-side clients and basically helped provide liquidity to those buyers. So you had some of the early investors looking to purchase large amount of BTC, and markets just weren't that efficient. There wasn't much liquidity on exchanges. And so Genesis filled the gap by saying, we're gonna just build an incredible network and make markets on both sides, and we're gonna focus on like large block liquidity. So all institutional focused. There was obviously some retail buying in the beginning, but that that kind of became their bread and butter. And, I think we started trading Bitcoin in 2015. We added Ether in like 2016, early 2017. And then obviously now we're trading, really the top 25 assets or so. And then when I joined, it was like, okay, we're one of the leading trading firms in the space. Like what's like next for these markets? And so at the time there was no, there were no derivatives, there were no options, there were no futures. I don't think CME was even around. And I think BitMEX is actually just starting. So it was like a super immature market when I joined. And so just kind of coming from traditional markets, I'm like, okay, wow, I'm sure there's going to be a lot more activity over time in derivative marketplaces. I'm sure there's going to be a lot of exchanges that will like actually start providing liquidity. And the easiest thing for us was like, okay, we have this balance sheet of all this crypto. Like, what can we be doing with it? And so like lending and like modeling our business after like a traditional prime broker, like securities lending firm, was something that seemed super viable. One, because we had the balance sheet and like Bitcoin to start with. And so we can just say, hey, let's just start lending out our own, from our own balance sheet. And then two, because of how well connected we were in the space through DCG and all the venture portfolios investments we made, and all the people that bought Bitcoin back from Genesis in the early days, that might be good suppliers of liquidity as we continue to scale the business. And so we basically replicated our business after a traditional securities lending firm. Mm-hmm. So think like Goldman or Deutsche Bank or Credit Suisse that provides borrow on stock to hedge funds that want to get short exposure. That was kind of like the first use case for Genesis Capital, the lending business. And so we allowed institutional counterparties to borrow Bitcoin, posting dollars as collateral, and then sell that Bitcoin directly through our desk to generate dollars. And we basically hold the dollars as collateral, lend them the BTC. We take some excess collateral from them and charge them an interest rate to do it. Mm-hmm. And then then those same counterparties were like, oh, can you do this with Ether? Can you do this with Ripple? Can you do this with Litecoin? And so we were like, okay, well, we don't have all those on our balance sheet. We need to start building like the supply side now. And so we said, okay, who are going to be natural holders of these assets? And so we started building bridges with a lot of the kind of long only asset managers in the space, or innovative funds that just had actual balances of crypto on their balance sheet that they were going to be holding for quite a while, and earning yield on those assets was like something that obviously was attractive to them when there was really no means to do it back then. And so we slowly but surely kind of built up our Rolodex of the supply side and started, facilitating more and more short sales on BTC, ETH, LTC. And for context, this was like right after the bubble. So this is like when there was like basically like leading into like the kind of great crash after the highs in December of 2017. And, we started just gaining traction. And so, then from there, it was, what's the other side of this trade? There's people borrowing crypto from us to get short exposure. Why wouldn't we start lending out stablecoin or dollars to allow institutional counterparties to get leverage and go long? And so that was kind of the next evolution of Genesis Capital. And ultimately now we're obviously providing borrow on both the coin side and dollar side, but obviously had to take like a traditional approach to building the business out because we had to model it after something that made sense. And securities lending was the closest thing to that. Now it looks a little bit more like securities lending and also like repo or margin finance, because there's both coin lending for shorting and there's also dollar lending for kind of levered longs. But that's how we ultimately, started the business.
Well, that's fascinating how each building block sort of naturally seemed to have fallen in place for you guys going forward. It's like, seems like
it was somewhat natural and organic, and people kind of got what we were doing. And we also, had to like lean on our clients to kind of guide us in the direction that they wanted, right? Like they ultimately were the ones that were going to, utilize our service. And so I remember back in the early days, just spending a ton of time on the phone with like, all of our clients saying like, what service can we provide? How would lending look to you? Like how much collateral would you be willing to post? How would you want to get margin called on that? What indicative rates would you even pay if we were able to get you access to Bitcoin borrow? And so there was a whole like markets, surveillance and surveying in the beginning that happened, to really kind of form like how this was going to work. And so then we brought on other experts that came from like traditional finance background. So we hired our senior risk officer, I think was the next hire after me, to help like manage the collateral and manage the counterparty risk and the counterparty exposure, and to help us like model out like what the future of this business looks like, coming from JP Morgan and Morgan Stanley. And then we just kind of, continued adding talent from there, and it all kind of came together.
So, question about you saying how you kept having to add assets because the clients who are looking for those. How do you guys determine what's an asset that is collateral in your eyes and what isn't? Because the crypto space pricing is so difficult. So I'm curious how that worked.
Yeah, for sure. So today, like we basically, as of today, we're accepting most of our collateral is going to be denominated in dollars or Bitcoin. Because most of our business is actually lending dollars in Bitcoin. And when I say dollars, I mean like US dollars, USDC, USDT, PAX, like the stable coins.
Mm-hmm.
Because, you know, there's the most maturity in those markets. And people are either going to borrow Bitcoin to go short, they're going to borrow Bitcoin for working capital, or they're going to borrow stablecoin to get long, or borrow stablecoin for like arbitrage. And so usually the collateral is in the opposing asset. And so if we're lending them dollars, the collateral is going to be in Bitcoin. If we're lending them Bitcoin, the collateral is going to be in dollars. If we're lending them altcoins, the collateral is usually in dollars. So I'd say about 90% of our collateral is denominated in stablecoin, dollars or Bitcoin. And then the rest of it is a mix of other altcoins out there that, funds might want to post in as an alternative to Bitcoin and USD. And so when we think about like, okay, what should be eligible for collateral, it comes down to a few things. One is like, where does this asset trade? Can we actually get liquidity on that asset? Can we sell the collateral if we needed to in order to, close out a loan or cover ourselves if prices were moving against us? And so we look at like various exchanges and, does this asset trade OTC, and are there, derivative products on it? Now it's like, is this listed on FTX? Are there perps? Are there futures? And so we're kind of surveilling the market for liquidity to say, can we trade in and out of this thing? The second is like price volatility. How much does this move around? Is this super new asset that's just like, crazy volatile, where, overnight this thing might drop 50%. And once we kind of understand the characteristics of the asset, then it's lastly like, can we actually hold this thing? Like, where would we hold it? Can we hold it in, our custody product? Can we hold it in Dicto? Can we hold it in, is it ERC20? Can we hold it on exchange somewhere? And if all those things line up, then we say, okay, great, we'll make this asset eligible, for collateral to back a loan. And then from there, it's just about level setting, like, how much of that asset do we need to get comfortable with the exposure of that counterparty? And so if it's less liquid or super volatile or both of those things, then we're going to require more of that asset to be pledged against the denominated loan. And if it's like Bitcoin or dollars that's like, relatively predictable, then, we might require less. So we kind of, look at all those things.
And how have you guys had to adapt? Because my understanding is that the rates have gone down quite a bit as the market has gotten, quote unquote, more efficient. Has that been worse for business, or is it still working fine? And I know that a lot of these big entities also try and look for uncollateralized loans. So are these things that affect you guys or not that much?
Yeah, no, they definitely affect us. So to talk about just like rates generally, I'd say that yes, rates have come down like historically. But also like rates are dynamic and rates change, as markets move. And there's a few drivers of interest rates. And obviously like interest rates are going to be asset dependent too. They're also going to be dependent on the collateral that's posted and the level of collateral that's posted. But from a what's driving rates perspective, there's a few things. One is how much supply is actually out there in that asset. And so if we're the only ones that have something and it's a really hard to borrow asset, we know that we can obviously level set and charge a higher interest rate on it if there is demand in that asset. The second is like, okay, what's the demand and where is it coming from? And I think there's two main channels of demand, or actually three now. One is, okay, if we're in a bull market, do counterparties want to basically be able to borrow dollars or stablecoin to get leverage and lever up their long positions? And if markets are hot and markets are volatile, then people are usually willing to pay more for cash or stablecoin. The second is more like arbitrage opportunities that exist in the space. So a classic example of something that's like widely traded today that is probably the largest driver of cash borrow rates or stablecoin borrow rates right now in the market is like where, funding or basis, ROIs are in the space. So I'll walk through that. What that means is, let's say, so like, as you know, there's futures on Bitcoin, there's futures on ETH, there's futures on alts. They obviously trade on FTX, and there's also perpetual swap products. But let's just use futures as kind of a baseline example. Generally, when we're in a bull market, like, retail is going to want to get exposure and speculate on the price of, let's just use Bitcoin for example. And so they want to do it in the most capital efficient, capital effective way, where they don't have to post dollars one-to-one to bet on the price of Bitcoin going up. And so you see this massive retail bid on derivative exchanges. It started with BitMEX. There's other major players in the space now that are taking market share, like OKX and Huobi and FTX, obviously, and Binance. But there's a huge there's a lot of retail appetite to basically take exposure and speculate on the price of Bitcoin going up, and doing it with leverage. And so the best way to get leverage and actually take that view is to go buy the either, let's just say the near dated future or far dated future on one of these exchanges. And because you can get leverage, you don't have to actually put up one-for-one capital to get exposure. And so there's this natural retail bid on futures products that cause a discrepancy between the price of the future, or the perpetual swap, and the price of the actual underlying spot that you'd see on the spot exchange. And so as that fluctuates, and that kind of basis gap widens, the kind of smart money, or like the trading firms in the space, will say, oh, wow, look at this arbitrage opportunity. This future is trading at $200 above spot. Why can't I just borrow cash from Genesis and use that cash to go long the spot market and sell that future, and then basically just lock in the spread? And at expiry, I know that I'm guaranteed to make that, because at expiry, the future and spot price will be trading at the same price. Mm-hmm. And if it happens to revert and those things start trading, more correlated or closer to each other before expiry, then I just made the same amount of money faster. And so they can look at that as saying, okay, if I can borrow cash at some interest rate, I just need the return on my investment of that basis opportunity to be greater than the cash rate that I'm paying. And so that's a huge driver of cash rate on stablecoin, or of interest rates on stablecoin and cash right now in the market. Now, let's say that spread becomes flat and all the smart money borrow a ton of cash from folks like Genesis or other lenders, and curves now are trading in line. But because smart money knows that these, that there's a natural kind of bid in retail in a bull market, they're going to bet that curve will ultimately widen out again when markets get hot and more volatile. And so now, to put the other side of the trade on, they might borrow Bitcoin, sell spot, and buy the future to take basically the other bet, saying that I think that the basis is going to widen instead of shrink. And so that's what kind of drives, like, when the interest rates on Bitcoin are higher than the average, or when the interest rates on cash or stablecoin are higher than the average. And there's a lot more creative things you can do when borrowing cash at fixed rates, and then using that to go generate alpha and capture various ARB in the market. So it's like these really, like, arbitrage opportunities that come about from the fact that these markets are just generally inefficient, that drive interest rates on cash. And so, like, yes, like, rates historically over the last 3 years or since we incepted have come down just because they're more efficient than they were, but they're super dynamic. They change all the time, and they still have the tendency to, like, totally blow out. Like, there was a time, even over the summer, where cash rates were, in the 18, 19% fully collateralized range because of how much gap there was between the future price of Bitcoin and the spot price. And it just seemed like no matter how much cash was borrowed to put that trade on, that basis just held. And so, yeah, I'd say, like, rates are dynamic. It's basically our responsibility to go out and understand that market structure and understand, like, what is driving rates, so that we could price our inventory accordingly, and also go to our lending sources and capital pools and say, like, hey, here's why we could pay this much on stablecoin, or here's why we can only pay this much. But that's kind of like the dynamic. And then transitioning to your second question around, like, unsecured capital or unsecured loans to counterparties. This is something that I think, as one of the largest lenders in the space, like, we have to be really careful about, and same with other lending firms out there. And we think about it pretty holistically. We don't have, like, a cookie cutter, LTV or rate for all of our counterparties, because we're not like a retail lender, like a BlockFi or Celsius. And so we actually look at and underwrite all of our counterparties. We get a sense of the size of their firm. We get their balance sheet and financial information. We can see how much equity is backing that company. We can see how long they've been around, what their strategy is, and kind of take our time really assessing, like, why are they borrowing? What are they using it for? And then on top of that, obviously, like, generally pushing people to be fully secured unless we're actually okay providing some sort of credit to that counterparty if they check all the boxes that I just mentioned. And so,
Mhm.
if we are going to provide some sort of, credit line or, some sort of loan that's like not fully secured, it's going to be the counterparties that we feel really comfortable with from a balance sheet perspective, where if something goes wrong, we have a master loan agreement that we basically are, using to get recourse against that counterparty in court. And we know they have all these assets behind them. And so we're not that worried if they did decide to default on the loan. Or we understand the nature of the trade and it's market neutral and they're not taking directional risk. And so even if the prices were to swing around, like this counterparty is not going to be at risk. So there's a very careful like due diligence process that has to happen for us to get comfortable extending any sort of credit to counterparties. And generally, like all of our loans are going to be on an over collateralized basis if the counterparty is like using it for speculation. So if they're using it to get leverage on a long or to go short, it's always going to be fully secured, and we're going to kind of have that position managed on a 24/7 basis. But if there's a certain kind of unique circumstance where the right counterparty that's super well capitalized and reputable in the space comes along, we can obviously entertain lending on an undersecured basis if it makes sense.
Mhm. Yeah, thank you for so wholly answering both of my questions. And I have some insight into your guys' KYC process, so I know how due diligent you are. You're very diligent.
Yeah,
And
it can
every
be quite the pain. And like on our KYC, it's like on the trading side, because we're a broker dealer, we have very stringent KYC AML processes and procedures. And then on the lending side, we basically just outsource that to our trading business. And so anybody that can't get past our trading team's KYC AML, we're never going to lend to. And so it is pretty stringent just because on the trading side, we are a broker dealer that's SEC FINRA regulated.
Yeah, it makes sense. You just have to be super compliant in every regard, especially because you guys are operating out of the States too. I mean, it just intensifies that.
Oh yeah, definitely does. And yeah, fortunately for us, we have a bit license in New York, and so we can operate there, out of the broker dealer entity. And then our lending entity is conveniently located in New Jersey, um, outside of kind of the New York territory where we don't really engage with New York counterparties.
So going forward, I want to ask you not about the norm, but about the unexpected. And I'm going to do one that I think is positive for you guys and one that is negative, and love to hear a little bit about how you guys think about these things. So first, I'll start with
Cool.
the positive swan, which I'll say is this yield farming boom we've seen, which I can only
Yeah.
imagine has been incredibly positive for you guys. And I'd like to know how you've adjusted to this. Has this changed your rates? Has this changed your market dynamics? Or has everything maintained the way it was when people were just doing the ARBs?
Yeah, for sure. It's a really good question, and obviously super, super hot topic now. It seems to be on everybody's mind in the space, and the opportunities seem to be endless with yield farming and AMMs and things like that. So it's obviously on our minds as well. And given we face like a lot of the leading trading firms and funds in the space that want to go take advantage of these things, like we have to stay educated on what opportunities are out there. What are the protocols? How do we use them? How do we kind of understand and measure the risk on those platforms? But for us, I'd say like the way we've thought about it and the way we've handled it is we're always going to be, a client service firm first. And so we think, at Genesis, like our biggest value add is going to be leveraging our balance sheet network and the DCG network to go out to the marketplace and obtain capital at a cost that's much lower than the rest of the space can basically, get access to. And then from there, say, okay, how do we want to deploy this capital in the most, risk adjusted, or risk to return adjusted way? And so, we're not going to go trade like these things ourselves. We're not going to go on, Compound or Balancer and start like, putting DeFi trades on to capture interest rates or to like liquidity mine ourselves. But what we will do is like understand the return opportunities of, on those platforms, and then look to say, okay, which funds or which trading firms do we think are best set up to go capture those opportunities relative to the risk of facing that firm. And so, that's kind of how we've engaged with DeFi, is basically taking bets on firms that we think will capitalize on those opportunities, but knowing that like, hey, we can still get collateral from those counterparties. We can still, we can still, risk assess and due diligence, them as counterparties to us. And so we're not directly taking the platform or protocol risk ourselves, but we're just relying on the people that know the space the best to actually go put our capital to work and generate yield for themselves while paying us interest rates that make sense. And so if we know that, the yield opportunity on Sushi Swap is 400%, and we think this counterparty can go actually trade that well and understand the risks, then like we might actually lend them dollars or ether or DAI to go basically capitalize on that return while paying us, an interest rate that accommodates us, for basically trusting them to go run that trade. So it's been a huge driver of decision making for us, in that like it naturally now is like something we'll look at to deploy capital to, because the interest rates can be so attractive. And so it's certainly, I would say it's made us take a look at like, who do we think is going to be able to take advantage of that the most, and how comfortable are we with scaling up like our positions with those counterparties to do it, and then how do we best position ourselves to participate in the upside or like the return profile.
Okay, perfect. That was my assumption for a more traditional firm such as yourselves. But I still wonder, was there not any hunger to go be the biggest farmer on the block and capture all of that for yourselves? Or is it just
So
not?
yeah, our philosophy on that is like of course there's hunger, and like we have really smart people on the desk that know like how to go do that, right? They see the trade opportunity there, and they say this is how this is how it's going to work. This is how we'd implement it. Here's our P&L would be. But if we always like operated with that mindset, like we would just be an ordinary like trading firm or prop shop in the space that like wouldn't be able to have the same scale and balance sheet and access to capital that we do today. So we've made a conscious decision to say we're not a trading firm, we're not a hedge fund. We're a lending institution that offers, a conglomerate of services ranging from custody to trade execution to lending and financing and to yield services, because that's like how we think we're best equipped to actually deploy capital into the space and to maximize like our own returns. And so, where we benefit is from our ability to kind of generate leverage by being that client service first, firm, versus just taking any capital we can get and putting that trade on. Mm-hmm. So that's just kind of that's our philosophy. That's a conscious decision we've made to really be a facilitator of alpha in the market versus trying to capture that for ourselves, but obviously like having a really good understanding of what is for the taking, so that we can appropriately price our own inventory and price our own risk.
Okay, perfect. And now on the flip side, how does a firm like yours deal with a black swan like March 12th? What was March 12th for you guys?
Yeah, so March 12th, it was a crazy day. It was crazy because it was one of the last days I actually spent in the office before COVID. And it was also crazy because it was one of the largest drawdowns ever in Bitcoin's history, or intraday drawdowns ever in Bitcoin's history. So as a lending firm that takes risk, that has to manage collateral and margin calling and liquidations, it's, those are the days you live for, and you have to manage carefully and properly to like maintain your reputation and maintain profitability. So it was a huge stress test for not only Genesis, but I think the space, in its entirety. And there were people that came out of that, better and well, and there were people that came out of that dead. And so fortunately for us, we went through that event with no capital losses, no defaults. We've actually never had a default or capital loss since our inception. And this was a really great test of just like our operations, our risk processes, our ability to understand our counterparties and the trades they were putting on, working with them to actually de-lever out of certain positions as the markets were moving without having to force liquidate them. Just knowing like how much capital they have behind them, and, that they're not going to, basically screw us if they default, or if they, like basically have to get liquidated. So it was a test on all fronts. From how do we think about it? Like, one is like, we have to make sure that we're obviously like utilizing our tech and systems to margin call counterparties, to bring in as much capital as we possibly can, from those folks that are, basically going underwater because the price of their collateral is now depreciating relative to the value of their loans. And so just ensuring like all of our risk systems were properly operating, that notifications were going out, that capital was coming in, and then, being kind of hands-on and high touch with some of our larger institutional counterparties that we have like no liquidation clauses with, and working with them to kind of like properly deleverage their positions, in a way that's systematic and that's orderly. So that was going on in parallel. And then on top of that, like the mempool was clogged, operations were just slow across the space. We couldn't it took us a while to get Bitcoin from the counterparties that owed us Bitcoin. And so we just needed to manage expectations. But the whole time, like we did feel confident. It was just like a slow kind of, process that we had to grind out. And then, other than that, it's like, I think like really understanding like the nature of what our counterparties were doing with the capital that we lent them, and like where we should dedicate time to focusing versus like where we know people are going to be hedged. And like, it doesn't really matter that this is happening. It's actually just like an exit opportunity for them on their position because vol spiked and now they can get out of their basis trade or their perp funding trade. And so like, we didn't have to take too much of a hands-on approach. So it's just like having a really good broad understanding of what was happening in the market. It was certainly scary to see Bitcoin fall from 8,000 to 6,000 to 4,000 to 3,000. And like, honestly thinking like, wow, like could this literally go to zero? And like, it seemed like with the cascade of liquidations happening on BitMEX, that was certainly like in the cards. And so like that thought was like, is this going to be like the death blow to the space? Fortunately for everybody, it wasn't. And we found a floor, bounced off of that. But it was a crazy 24-hour period. Like, I don't think I slept 1 hour in probably 2 days. And it was a great way to go out and then leave the office and then not return since then. So crazy times, but like super proud of like our team and ability to kind of manage through that. And also like, it's a testament to the counterparties that we choose to face off against. We're not like, like I said, we're not facing thousands of retail counterparties. We're just facing the top institutions in the space that we believe in, and that we believe can manage their liquidity and capital on their end. So it was a crazy time, but we were pretty well prepared for it. We had a ton of reserves of inventory on our balance sheet at the time. And so from like an inflows outflows perspective, I think we were top of class in terms of being able to just like settle trades quickly, get collateral back to counterparties, and things like that, which you kind of have to do in a period like that to, underline and, show you're coming from a position of strength.
Well, huge kudos to you and your team then. My assumption on that one would have been that you guys took a hit, but it seems like you chose your counterparties very well. So that's really nice. And honestly, you guys probably came out stronger. Than you were one of those that came out the other side looking better than the competition, I'm assuming.
Yeah, I definitely think so. I think like just coming out, like anybody coming out of a 50% intraday drawdown, when you're running, like at the time, our book was about $1 billion in terms of loans outstanding. And so like managing $1 billion book with a 50% drawdown and coming out with no capital losses, I think is a win. So I would say just like for that reason alone, we felt like we came out stronger just because we proved ourselves in a time that was like super important to prove yourself in.
Yeah, and I bet more people wanted to work with you guys after as well. They're like, oh, this is a good
Yeah,
counterparty.
Yeah, for sure. And like, we saw a ton of trading volume too that day. Like not just like I was just basically speaking to the lending side, but obviously our OTC trading desk saw a ton of volume that, they were managing real-time market risk. We were managing credit and counterparty risk and collateral, and they were managing real-time market risk in a move like that. So it was certainly a test for both the trading side and the lending side, but one that we feel pretty good about.
A couple more questions here, Matt, before we wind down. One is, you have a pretty unique view into the space and you're interacting with a lot of the people that are pushing the envelope. I'd love to hear your personal view on where you think the space is going as a whole, and take that as you will, from what perspective you will. I know everyone has a little bit of a different view of what the cryptocurrency market is, but just your overall insight, I would really appreciate it.
Yeah, for sure. I think like the two things that I can speak to, at least, or speak to the most about, like one, like I'm personally just super bullish on the space, because I feel like the first dominoes are starting to fall in terms of like the actual catalyst that I think is going to propel Bitcoin in the asset class, which is like real buy side involvement in like believing in the thesis that everybody talks about, which is like Bitcoin is a store of value, and it's the best store of value in the digital era. And as soon as people realize that, then like the chips will start to fall. And I actually feel like that's finally starting to happen after like 3 years of people talking about it. 3 years ago, people were like, oh yeah, the institutions are coming, but no one was actually coming. Like there were no like buy side passive funds saying, I'm going to use Bitcoin as like my reserve currency and like hedge against inflation. It was more just like, retail investors, individuals, speculators. And then you saw the next wave of that, which was like all the market makers, like the Jane Streets and the Jumps and the Susquehanna saying, oh, these markets are super rich with alpha, which they are because of how immature, and how much like inefficiency exists. And so they can just like repurpose their tech to take advantage of the alpha, which makes a lot of sense. But it's still like you're not seeing like that massive buy-in and like belief in the thesis. And I think like seeing the Paul Tudor Jones news happen, and then the MicroStrategy, purchase of BTC recently, I think it's going to get a lot of people talking about it. And for me, like the major catalyst that I see is you need people that understand the asset, that understand the infrastructure, that understand blockchain, to be in like the decision maker seats, to actually like repurpose capital at the institutional level. And that transition like hasn't fully happened. That's people like me being like running a sovereign fund, or people like you running a mutual fund or pension fund, and actually having the keys to say, I'm choosing to allocate capital to this asset class because I believe in it. I understand like, the digital era. I understand that it has similar properties to gold, and that I just believe it's a better gold. And so like, as people like you and me that understand that actually get into positions of power to make those kinds of decisions at the institutional level, I think that's going to drive a lot of people to make similar decisions to MicroStrategy. I think you're going to see like treasuries actually starting to take positions in Bitcoin. You might see governments starting to take positions in Bitcoin. So like, I do believe that thesis will play out and will single-handedly be the largest driver of Bitcoin's price appreciation. On the more like, client service, like Genesis side, I think another key theme that we'll see is like from like the yield perspective or lending perspective, like yields ultimately going to become like table stakes in the space. Like every exchange is going to offer yield. Every wallet service or custodian is going to need to entice users with yield opportunities. And so like we obviously came into the space, no one was lending Bitcoin, and no one was like lending dollars for people to buy Bitcoin, or providing like the ability for people to generate yield on assets. We obviously saw it as an opportunity. I think now it's going to become commonplace, and you're starting to see it. You have obviously Genesis Capital was spawned in 2018. You saw companies like BlockFi have major success. You saw companies like Celsius and Nexo and Crypto.com. And I truly believe that like a yield product for all these wallet services, exchanges, and custodians is going to become commonplace. And so like for Genesis, like we're saying, okay, if we believe that that's going to be true, how do we want to participate in that? We don't face retail. So like, do we want to shift to do that? Or do we want to just kind of continue to like leverage our strengths and say, you know what, we'll be like the back end flow to basically accommodate all these like deposit aggregating platforms out there. And so if we can say we actually, our roots are on the institutional trading side, we understand the nuances and the market structure. And so like, we feel like we're best positioned to put your capital and deposits to work in the best risk adjusted way, then, basically use Genesis as the back end to your platform, and then be able to pass through yield to your counterparties. And so like, that's how we're trying to, position ourselves. We're working on like an API infrastructure to allow, retail deposit aggregators to utilize Genesis as their yield services or yield manager. And so we're trying to position ourselves to just really like, be in the prime seat and take advantage of that shift as it starts to happen, because it's clearly going to become like a table stakes thing. So those are like two, snippets or viewpoints that I have.
No, yeah, I agree. I agree wholeheartedly with both, especially on the second one, just from a point of where I believe you guys are focusing 100% correctly is that direction. Because, you guys are pretty big now, but once this goes more mainstream, you guys are going to be very, very big. So
we hope so. We hope so.
So yeah, I think that's really phenomenal. And then my last question for you, Matt, to go watch this presidential debate, is for people that may be wanting to enter the space, and perhaps from a traditional finance background or not, what are some words of advice you could give to these people?
Yeah, for sure. That's a good question. I would say one, like, don't just follow the trend because like crypto is, hot and like there seems to be a lot of opportunity on paper. Like I would say like figure out what your own abilities are, how you'd want to engage in the space. What's the value you can actually bring, and find a home that makes sense relative to that versus just like throwing darts and trying to just land on anything. Like it makes sense to like have a sense of purpose coming into the space if you're going to actually make impact. So understanding like your own value add and then finding a company that makes sense to actually be able to use your abilities in the best way, with the best team. And then, two, like what things can you take from prior experiences that you think might be like new ideas or new concepts to this market. I think creativity is like a huge thing in crypto. Obviously, it's incredible to see how many unbelievable entrepreneurs there are and like what people are building and how talented certain developers are. So like what other creative ideas can people bring from various industries to the space to continue building? Like I think the entrepreneurial spirit in crypto is unparalleled. So that has to remain for the space to continue to do well, and I think it obviously will.
Thank you for that. And thanks for coming on the podcast, Matt. I appreciate it.
Yeah, for sure. My pleasure. Thanks so much for having me, Tristan. It was a great time.
Bye. Take care.
All right. See ya. Bye.